Texas is one of the least tax-friendly states for retirees. What? Josh, you've really lost your marbles now. Not me, my friends. Kiplinger's reporting this. Kiplinger. So let's dive into this, shall we? Here's the Kiplinger state-by-state guide to taxes on retirees. Someone should have written a book about that. Oh yeah, I did. I took it down because it's from 2017, Frank. I don't feel like doing it again. But anyway, I did this in 2018. I published it for 2017. But stuff changes. And once we see these new laws coming down the pike, new legislative chambers and whatnot, we'll see how this changes in 2020. But for right now, I'm not doing it again until next year to see the new 2020, the new tax regime in various states and whatnot. But anyway, so here's Kiplinger's, and they rate Texas as being one of the least friendly, of the top 10 least friendly. You got Texas. It's not all that. I mean, that's surprising. We got the basically northeastern states are quite least tax friendly. Not really other debate. If you've been following this stuff, nothing else really jumps at you. Maybe Nebraska, Kansas, and Iowa. But I've been following this for a while. So those upper Midwest states are always pretty tax not favorable. I'm surprised to see South Dakota in the middle of the realm there. That's odd. I thought South Dakota might be a little bit more tax favorable, but we'll dive into that. The most tax friendly, we got some surprises: Delaware and Hawaii. Again, those aren't that surprise for me because they were in my top 7 when I did my book. Wyoming is top shelf for sure. Nevada, I was surprised to see Colorado, and I'm actually surprised to see Arkansas in there as well. The mix, I was surprised to see West Virginia. A lot of times West Virginia gets notorious for being a high tax, but I was surprised to see that in there. Maryland in the middle. I'm telling you, Maryland isn't all that bad. I'm telling you. Disappointed to see Oklahoma in the middle there. And South Dakota, that was kind of odd. Not tax friendly. Nothing really jumped out of me there. Indiana, Ohio, you think because they've been run by Republicans for a while, they'd be more tax favorable, but no such luck. And of course, least tax friendly, the one was Texas that jumped out the most. All right, so let's. I did a list here. I got my view state compare list. So I got the states I've lived in. So I was born in Maine. My wife was born in Virginia. We met in Virginia. We got married in Arizona. We live now in Georgia, and we lived in Texas. We also have New Jersey to the list, but no one's going to New Jersey, so we're not adding that. Arizona's most tax friendly. They go income tax range 2.59 to 4.5, but that doesn't tell you the whole story, because if they don't tell you what the income tax limits are, oh, here they go. Low is 2.5% on up to 54,000 taxable income. Oh, there you go. Oh, sweet. So low at 2.59 if you're up to 54,000 of taxable income. Remember, taxable income is before standard deduction. So if you're married, filing jointly, that's about $80,000 roughly of gross income that you and your better half can make, and you only pay 2.59. Don't forget, right here, they just imposed a 3.5% surtax on taxable income over 500,000 starting in 2021. So the high is going to go up to 8% in Arizona. To lose some of their benefits there from being one of the lower tax states in that area, because Nevada's right next door. Nevada's got no state income tax. Social Security benefits not taxed. Up to $2,500 of income from federal government. I hate this. Up to $2,500 from income from federal government, designated Arizona state government, and Arizona local government retirement plans is exempt. So if you work for the government, you get more benefit than some guy who works in the private sector. I'm telling you, man, that stuff's got to stop, because people are getting mad about that. Trust me, I see in the comments, I see in the emails. That's nuts. Why should government employees get $2,500 of income exempt? That's nuts. $3,500 military retirement income is exempt. Sales tax 5.6 is the state levy. Localities can add as much as 5.6 to that. Wow, it's pretty high state sales tax right there, 8.4. All right. Groceries are exempt, but taxes do apply to localities potentially. Clothing and motor vehicles are taxable. Real property tax rate is pretty low for Arizona. If homeowners who are at least 65 and live their primary residence for at least 2 years and fall below a certain income, can have their valuation of their property frozen for 3 years, and the freeze can be renewed every third year. All right, property tax. Okay, so the property tax. Either way, that's still pretty cheap, man. $617 on per 100,000 assessed value. Remember, it's always the county, though, man. Annual car license tax is based on the car's sticker price and age is imposed. So I guess they're amortizing that or depreciating that, if you will. No state or inheritance tax. All right, so that, like I said, I did a video. I compared Texas to Arizona, and by far and away, Texas was better. Here's my state, Georgia. Low is 1%. It's confusing. 1% of the first 1,000 tax. Okay, that doesn't tell you anything. So the income tax rate, that doesn't tell you anything. So they need to redo that. Ever wonder why so many retirees moved to the great state of Georgia? Well, the climate and the tax climate. The first $65,000 of income you make when you're over 65 is tax free. So for you and your better half, that's $130,000, man. So basically, no income tax. Social Security benefits are not taxed. So we're talking 4% is the state sales tax. You can add another 4.9 for localities. So the average is about 7.31, which is about the average. All right. It's where they say localities, motor vehicles exempt from state tax, but local taxes apply. So you want to look at the county for which you buy your car. The median property tax is $875 per $100,000. It is really the county, man. You got to be careful the county you're going into, because I live in Fulton County, significantly higher than 2 miles that way, which is Cherokee County. No annual car vehicle tax is imposed. I don't understand that, because I pay. They get you hard the first time you register your car here. I mean, hard. After that, I pay $20. I don't know if that's a motor vehicle. It's from the county, so I'm not sure if that's the county. I don't know. But after the first year, they get you. After that, it's as cheap as can be. All right, so let's keep going. Maine. Let's take a look at Maine. All right, so Maine. Oops, what happened? I just deleted it. Oh, man, I don't want to delete it. Let's go back to, let's look at Texas while we're here. No state income tax. Sales tax is 8.25 on average. 6.25 is the state levy. Localities can average 2%, which they certainly do. So they basically have a combined rate of 8.19 for sales tax. So sales tax is on the high end. That's not extraordinarily high. It's definitely on the high end, but not the highest you've ever seen. And everything's, motor vehicles are taxable, clothing's taxable, but groceries and drugs are exempt. Here's where they get you. The median property tax is $1,692. They got some homestead exemptions, and if you're over 65, they have some exemptions as well. They have this property tax freeze. I don't like that. I mean, it's kind of almost like reverse mortgage. You're basically taking money from the future and not paying it now. Or a reverse mortgage, you're actually living on money today, and you're going to pay it back once you die, when you sell your house. Because remember, the property taxes that you continue to accrue during your deferral period has to be paid back at some point. Annual registration fee is imposed on your car, and if my memory serves, that wasn't cheap either. I remember it wasn't as bad as the first year in Georgia, but it was pretty expensive for sure. All right, so let's go back. That's Texas. The property tax where they get you. Virginia's pretty tax friendly, man. I'm telling you, man. Let's look at it. Old Dominion offers a few tax breaks here and a few tax break there. Okay. Doesn't tax Social Security benefits, and residents up to 65 can deduct up to $12,000 per person of other income. That's cool. Another break comes in the form of low state sales tax. For retirees, low state sales tax and low property tax are critical, man. Property taxes are below average too. So I'm telling you, low state sales tax, low property tax, that's a panacea in my opinion. Income tax is 2% on up to $3,000 taxable income. That's obviously after standard deduction, but ain't much. And then high is 5.75 on taxable income above 17. So the income tax they get you, but it says low property and sales tax. Social Security is not taxed. Income for retirement plan may be deductible if okay. In addition, taxpayers, we are talking about the 65. Sales tax 5.3, including 1% that is allocated to local government, so quite low. Northern Virginia Central and the Hampton Roads have an additional sales tax for the highway construction, supposedly. You do pay a sales tax on groceries. Clothing is taxable. Motor vehicles are exempt from ordinary sales tax, but taxable under a special 4.15% excise tax. In Virginia, the median property tax is $804. Now remember, it is completely contingent on your county. If you live in Fairfax or Arlington County, it's going to be high. If you live in Rockham County, it's not high at all. It really depends on your county. Annual car tax is based on your assess. Okay, so basically the localities assess your vehicle and administer the tax. All right, so Virginia's good. All right, so let's go to Maine here. because I'm from Maine. All right, so we got to check out Maine, and then we'll look at a couple other ones, see why there's down on South Dakota. Maine, the coolest state in the union. When it comes to taxes, retirees get more bad news than good news in Maine. Property taxes, with a median annual tax rate is more than $200 above the national average. Pine Street State, like the majority of states, exempts Social Security benefits, plus up to $10,000 per person of eligible pension income can be deducted. However, income above that threshold faces stiff income taxes. So 5.8% is the low on taxable income, less than $22,000 for singles, or $44,000 for married. So if you're living in Maine, you're making $70,000, you don't pay, you pay 5.8. If you make over $130,000, you pay 7.15. So that is pretty steep for taxes for sure. The 5.8, let's see, they said, okay, for 221, okay, that's for 2021. Social Security benefits are not taxed, so if the bulk of your income, Social Security is not taxable. Tax breaks for other sales tax is 5.5, so very low sales tax, which is good because right down the street is New Hampshire, which doesn't have any sales tax. Groceries are exempt. Staples, you can see all that right there. Prescription drugs exempt. Motor vehicles and clothing are taxable. The median property tax in Maine is $12.95 per $100,000. If you're over 65, you could claim a $1,200 property tax credit if your income is less than. If your total income, so does that mean it's tax? I don't know. Of $67,000 if you're married filing jointly, or $42,000 if you're single. They do charge you an annual vehicle excise tax based on sticker price and your car's age. And then they do have an inheritance tax. Maine has an estate tax with an exemption of $5.8 million for 2020. Remember, life insurance is included in your estate. The exemption is adjusted each year for inflation with an 8 to 12% tax range. All right, let's keep going. I want to see South Dakota. I'm surprised South Dakota came in so low in the middle of the pack here. So let's take a gander, shall we? Take a look at the state's property tax, which are on the high side. Yep, but no state income tax, and thus they don't tax Social Security benefits. 4.5% is a state tax levy, but localities can average add another 4.5%, and the average is only 6.4%. That ain't bad, man. Yeah, the sales tax, the property tax is high, $12.19 per $100,000. Tax freeze or tax reduction is available for seniors 65 and older. You must meet some income requirements. Let's see, a lot of requirements there. People think, okay, that's too much, but it doesn't look like much. As long as you're making over $30,000, it looks like you don't get the credit. An annual license fee based on cars' weight and age is imposed. No, that doesn't seem that bad. I mean, the property tax will they get you. So at least Kiplinger's recognize the property tax is a big one. Let's look at why they got Arkansas in here so well. That's interesting to me. A lot of good things to say about the overall state and local tax burden in Arkansas, what we call Arkansas. Sales tax in Arkansas is rather high, according to the Tax Foundation, has the second highest average combined state and local sales tax rate in the nation. Income tax, the high is beginning 2021, the top rate for taxpayers with net income over $79,000 will be 5.9%. On taxable income over $8,000. But that doesn't make any sense. Beginning in 2021, the top rate will be 5. I don't understand what that's saying. All right. Okay. So why would that be tax friendly? High is 6.6% for taxpayers with net income. Is that considered taxable income, or is that AGI? I don't know. So I'm assuming that's taxable income. So if you're making less than $100,000 gross, you're probably going to be in a 5.9% tax bracket. That's still pretty steep, man. $6,000 of income from private or government retirement plan is exempt. Distribution IRAs are also qualify for $6,000 exemption as well, and they don't tax Social Security benefits. Sales tax is the average combined rate is 9.53. That's high, man. And then property tax is $612 per $100,000. They do pass an annual vehicle property tax. That doesn't make sense. Why would I don't agree with that at all, man. That's a pretty significant state income tax. Sales tax is high. The property tax is low, but I don't get that at least. Let's look at Oklahoma. Oklahoma's one of my states now to look at. So good news and bad news for Oklahoma. They don't tax Social Security. You can also scoot up to $10,000 per person of other types of retirement income. Fantastic. One of the highest combined state and local sales tax, an average of 8.95, and both groceries and clothing are subject to state sales tax too. High income tax on your highest is 5% on taxable income for $12,000 if you're over married filing jointly, but they don't tax Social Security, and you get a $10,000, $20,000 for you and your better half. Exclude $20,000 of retirement income. So $20,000 retirement income, another $40,000 Social Security, no state income tax. Up to 75% military benefit. All right, sales tax. The average is about 8.95. With groceries being taxed, oh, that sucks, dude. That sucks. Motor vehicles, 1.25% tax on 3.25% excise tax applies. So just buy one car and be done with it. Median property, well, that's just a little bit higher than we thought. $869 per $100,000. But if you're over 65, you can get a $200 rebate on your property taxes. All right, as long as your gross income is $12,000. Oh, wow. All right, so there it goes. That's Oklahoma. Anything else jump out at me here? Let's look at California real quick because everyone hates on California. But I tell you, look, I hate on California too, but the taxes aren't that bad. California's the reason it's bad is because they're freaking tyrants. All right, so they have a high income tax rate. I get that, but who's paying that? Not that many. All right. Social Security benefits not taxed. Income from private and military government military retirement plans is generally taxed by California. However, there's some difference between California and okay. 2.5% penalty on early withdrawals from retirement plans. Yeah, that's bad. 7.25 is the locale. So they're paying 8.68 in average sales tax in California. Property tax is the median is 729 per $100,000. It looks like you can defer property tax. Remember, deferral, I just find it funny. All these people are going to say, I hate reverse mortgages, but I defer my property tax. It's basically the same thing. I mean, you're going to pay it one way or the other. Annual vehicle license fee is based on the car's purchase price. All right. Well, there's some good stuff there. I always like this stuff. I'm somewhat, I don't know, I don't agree with all that much. Tax map for middle-class families. Ooh, look at that one. And then the 10 least tax favorite for retirees. All right, cool. Look at all those. Anyway, so we'll check that out. If you like what you see, let me know. Let me know what you're thinking. For me, Virginia's still top shelf. Delaware's still my top list, man, for sure. Texas, no, can't. It's just too expensive. Property tax too high. Like Oklahoma, right up in there. I'm telling you, I'm looking at right there. Maybe look at the Arkansas side. I can't imagine my wife living in Arkansas, but hey, we can try. Tennessee, we're going to be going through there here shortly. This other part of Tennessee, going through Asheville, up through Johnson City, and down this way. Let's see your thoughts. See ya.